West African Development Outlook, WADO, under the theme, Confronted by Trade Uncertainty and Regional Fragmentation. This report focuses on how new global and regional shocks, such as trade wars and potential withdrawal from ECOWAS, are impacting West African economies. Now, you are aware that this year we celebrated the 50th anniversary of ECOWAS, but the community faces the possible exit of 3 of its founding members, Burkina Faso, Mali, and Niger, which threatens regional trade and security cooperation. The format for today's presentation is I will do the introduction as I'm doing now, and then the Vice President for Operations of the bank, Dr. Olagunju Ashimolo, will give a brief remark on behalf of Mr. President. The third item will be the main focus of today's presentation, which will be a presentation and introduction by Dr. Joseph Asanso, who is our head of macroeconomic and study division. The fourth item will also be Q&A, where you will have the opportunity to ask your questions and see what is it. We will talk about, the report will talk about the performance highlights of 2024, outlook and projection for 2025, recent developments shaping the outlook, as well as social economic challenges and progress. With that said, I would like to give the floor now on to Dr. Ashimolo, who will give a brief remark on behalf of Mr. President. Thank you. Our VPO.
Thank you so much, Director Guano. Yeah. Honorable ministers and representatives of the governments of the ECOWAS member states, heads of ECOWAS institutions and representatives, CEOs and managing directors of financial institutions here present, captains of industry, EBID management and staff, members of the press, distinguished guests, good morning to you. It is my pleasure being here today on behalf of Dr. George Ajekudonko, President and Chairman of the Board of Directors of the ECOWAS Bank for Investment and Development, to address you on the launch of the West African Development Outlook 2025 edition. As you will all know, as the Regional Development Finance Institution of the ECOWAS region, it is the responsibility of the ECOWAS Bank for Investment and Development to bring issues that affect our collective developmental aspirations to the front burner and share our perspectives on these same issues. One of the ways we have chosen to do this is through the annual publication of the West African Development Outlook, WADO, the bank's flagship socioeconomic knowledge products. We are gathered here today to present the 2025 edition of the products, to apprise ourselves of geopolitical challenges that confront us collectively and to highlight headwinds that confront us amidst the never-ending cycles of shocks, which have derailed macroeconomic stability in many countries in the sub-region. Ladies and gentlemen, we continue to live in an uncertain socio-economic environment as shocks have become constant and the order of the day. The global economy is volatile, one shrouded in uncertainty as wars engulf Europe and the Middle East with detrimental threats escalation. The theme of this year's edition is Confronted by Trade Uncertainty and Regional Fragmentation. It encapsulates the challenges confronting the ECOWAS sub-region and the imperative need to develop mitigating measures to address the socio-economic impact of a regional fragmentation. This year marks the 50th anniversary of ECOWAS. What we all presently know as the ECOWAS Commission and the ECOWAS Bank for Investment and Development were created by the founding fathers on 28 May 1975. We are celebrating 50 years of long and remarkable cooperation and existence in the sub-region. However, Amidst this celebration, we are also confronted by a major ordeal as 3 of our member states are in the process of leaving the community. The 2025 edition of WADO highlights the global challenges that confront the ECOWAS sub-region, as well as the adverse impact that the exit of the 3 member states will have on the movement of goods and persons, and provides medium to long-term policy options navigating these challenges. It also highlights the need for greater integration to mitigate the impact of geopolitical factors, particularly the trade war over the recent months. Some of the highlights of the 2025 WADO are as follows. The ECOWAS GDP growth recorded a robust growth of 5.1% in 2024 from 3.9% the previous year. The outlook for 2025 and 2026 is very encouraging. The ECOWAS average inflation deteriorated to 3.7% in 2024 to what it was at 20.8% in 2023. Inflation will taper in 2025 and next year. Fiscal balance weakened to minus 4.8% of GDP in 2024 from negative 4.6% in 2023. The debt to GDP ratio worsened to 60.7% in 2024, but is set to improve this year and also in 2026. The imminent withdrawal of Burkina Faso, Mali, and Niger from the community will adversely impact intra-regional trade, which has averaged at 8.6% over the last 3 years. The departure of these 3 countries will likely reduce the intra-ECOWAS trade to 5.2%. On this note, I will hand over to the Research and Strategic Planning Department of this bank for a brief presentation on the 2025 West African Development Outlook, followed by an in-depth discussion on the issues I have raised and many more. At this point, I want to express our gratitude to all participants here present today. And also we thank EBID's continued we express EBID continued commitment to the socio-economic development of member states and supporting their economies to build some level of resistance to the seemingly never-ending regional and global shocks. Thank you very much for your kind attention. Have a nice deliberation to you all.
Thank you, Dr. Ashimolo. And before Dr. Asanso comes in, I would like to tell everybody in the audience that we have an option for interpretation. So you can just look at your screen, and if you are comfortable and in other languages, you can click on the button down on your computer or on your phone, and you have interpretation. Having said that, and thank you, Dr. Ashimolo, for the statement delivered by Mr. President. We will now call on Dr. Joseph Kwadwo Asenso to give the highlights of the 2025 West African Development Outlook. Dr. Asenso.
Thank you very much, Mr. Gwanu, Director and VP. As has been amply stated by the 2 speakers earlier, the 2025 West African Development Outlook is themed confronted by trade uncertainty and regional fragmentation, which speaks to the current trade tensions that we are experiencing, as well as the decision of the 3 member countries, Burkina, Mali, and Niger, to leave ECOWAS and what the impact could be. The presentation, just like the document itself, is partitioned into 6 sections, as can be seen on the screen. First and foremost, we will be talking about the performance for 2024, where we experienced robust growth at the regional level and then declining inflation. ECOWAS experienced a 5.1% growth in 2024 relative to 2023, where growth was at 3.9%. And as you can see on the screen, the YMO zone also experienced a higher growth in 2024 relative to 2023. Overall, 9 out of the 15 member states experienced higher growth in 2024 relative to 2023. The chart on the extreme right shows the percentages of all the countries with respect to the share of GDP, and this is million USD. Last year, Nigeria controlled about 51% of the regional GDP. That was 2023. But by the end of 2024, it had declined to 35.2%, mainly as a result of the exchange rate troubles Nigeria had in 2024, which has led to a decline in its nominal GDP. Nigeria used to be the number one or the largest economy in West Africa. Now Nigeria is at third position because of the currency depreciation. That has also impacted its share of regional GDP. On average, we can see that food prices declined throughout 2024. There is a marked decline from what it used to be at the end of 2023 to the end of 2024, but it has started to pick up in 2025, especially in the first quarter, as can be seen on the chart on the left. Average inflation in West Africa actually in ECOWAS increased from 20.8% in 2023 to 23.7% in 2024. However, this masks the positive performance by the countries individually, as 10 out of the 15 member states experienced inflation moderation in 2024. As can be seen on the right, end of period inflation also performed much better, with all the 8 CFA countries and Cabo Verde recording below 5% inflation, in line with the inflation target for the period. With respect to the fiscal, many of the countries experienced a higher growth in revenue than in expenditure. As many as 11 of the countries experienced improvement in the fiscal position, with about 10 experiencing higher growth in revenue than in expenditure. As you can see for Nigeria, revenue growth was more than 75%, owing to the fact that oil prices were higher than they had projected for the period of 2024. And expenditure also crossed the 50% barrier. In the case of Ghana, which also benefited from higher crude oil prices, higher gold prices, and higher cocoa prices, revenue growth was more than 35%. But in an election year, the expenditure growth was more than 65% as well. There are many of such stories across the sub-region. So at the end of the period, ECOWAS experienced a higher end of period fiscal deficit compared to 2023 of about minus 4.8% of GDP compared to minus 4.6% of GDP in 2023. In the YMU, there was a decline in the deficit. In the WAMS plus, it was flat. And in the Alliance of Sahel States, ASS, there was a decline, there was an improvement. And you can see the figure on the right-hand side showing that 12 out of the 15 member states failed to meet the 3% fiscal deficit threshold of ECOWAS in 2024. Debt to GDP, the performance on the fiscal fed into the debt ratios. 8 out of the 15 member states recorded improvements in their debt profiles. 6 countries' debt ratios exceeded the 70% ECOWAS threshold, and 11 out of the 15 member states recorded improvements in their current account balance, with Nigeria and Ghana leading the way. ECOWAS debt to GDP ratio at the end of 2024 was 60.7% compared to 56.5%, signaling that debt levels are increasing at the regional level. While current account improved from minus 2.8% of GDP in 2023 to minus 3% of GDP in 2024. Unemployment and labor productivity. We see that unemployment is increasing. It increased from 2023 to 2024. We project that it will continue to increase in 2025 and 2026. Labor productivity has also suffered over the period. However, for 2024, there was a slight improvement from minus 0.73% to minus 0.9%. So labor productivity performs in tandem with how the economy also performs. So if there is overall growth, chances are that with prices being stable, there will be an increase in labor productivity as well. Working poverty. The chart on the left shows that in 1994, those persons who are classified as extremely poor, that is living on less than $2.15 per day, were actually more than 35%. By the end of 2024, that number had reduced to less than 10%. A similar trend can be seen at the regional level, with many countries in ECOWAS recording positive growth. That notwithstanding, 13% of persons who are classified as extremely poor live in West Africa, even though 13 members made good progress on the index in 2024. Food insecurity. Food insecurity is a major problem in our sub-region, and we had 6 member states experiencing a deterioration in their severe food insecurity index, as can be seen on the left. However, what we've realized is that the issue of food insecurity goes beyond production. It also speaks to the issue of waste. And globally, there is a report by the UNEP. It says that the average food waste per kilogram per capita per year was around 79 kilograms. All the countries in West Africa exceeded this index, except for Senegal, which had 77 kilograms of food waste. So beyond producing, there is also a need for us to ensure the judicious use of resources and ensure adequate storage facilities to reduce waste and to improve food security in the sub-region. Outlook. For 2025, we project the GDP to grow by 5% for the ECOWAS region, down from 5.1%, and to rebound to 5.4% in 2026. We expect average inflation to decline consistently in 2025 and 2026, and we expect fiscal balance to also improve from minus 4.8% of GDP to minus 3.9%, and further to minus 3.6%. We expect debt to also improve over the period for the sub-region to 56.3% of GDP at the end of 2026. For the current account balance, given that Nigeria particularly has not met its petroleum benchmark price target for the year, we expect that the current account balance will deteriorate slightly in 2025 and rebound to minus 0.05% of GDP in 2026. For the regional blocks, we are looking at the WAMU, WAMS Plus, and Alliance for Sahel States. We are expecting that growth will be led by the WAMU from 6.1% in 2024 to 6.2% in 2025, to decline marginally to 5.6% in 2026. For the WAMS Plus, we expect growth to end 2026 at 3.7%, and for the Association of Sahel States, growth will decline from 6.1% in 2024 to 5% in 2025 and rebound to 5.1% in 2026. Inflation is expected to improve over time, given the positive outlook we have for the exchange rate and energy and food prices. ECOWAS is projected to end the year at 18.6% and further to 15.6% in 2026. The same as WAMO, which is expected to go below the 3% threshold for the WAMO zone in 2025 and also in 2026. Fiscal balance. We expect that there will be an improvement over the 2-year period from -4.8% to -3.6% of GDP. Similar to WAMO, but the ones will deteriorate in 2025 and then improve in 2026. Debt to GDP. As I said earlier, ECOWAS will experience a consistent decline over the 2-year period of debt to GDP, and then the WAMO will also experience a decline over the period, the same as WAMS. For current account balance, we expect that the WAMO will experience an improvement from the -6.1% of GDP it recorded in 2024 to -3.2% of GDP in 2026. Unemployment. We expect unemployment to continue to increase, even though marginally, over the 2-year period, unless there are policy interventions that absorb many of the teeming youth who are graduating from the universities and from the secondary schools. We expect that labor productivity will also improve over time, given that GDP is expected to be boisterous, with 11 out of the 15 member states projected to record an improvement over the 2-year period. Upside potential. The projections for the 2 years have been helped by a weaker dollar than we experienced in 2024 and 2023, with many members of the sub-region experiencing a strengthening of their local currency. If this continues, the projection will hold or will even outperform. We have seen gold prices being bullish, cocoa prices being bullish as well. This is positive for the outlook for the sub-region. Oil prices have been moderate compared to what they were in 2024. This is positive for inflationary pressures in the sub-region. And if things stay like this, some of these projections might actually perform much better than we have anticipated. Downside risks. Remittances. The US recently passed what they call the Big Beautiful Bill. What has not stood out is the fact that there is an element in there which says that remittances to countries outside of the US will attract a 3.5% tax. This will increase the cost of remittances, especially to the senders, which could also affect the rate at which they remit. Again, there is coming a time when you will need an ID card to be able to remit your family back home as part of measures to control who gets to live in the US. That will affect remittances, put a downward pressure on our reserves, deteriorate the exchange rate, and have a pass-through to inflation, which will not be positive. Commodity price decline. Oil prices, as I said earlier on, have not held up to projections. But if cocoa and gold prices also decline in 2025, that will be negative for most of our countries who are primarily exporters of these commodities. A strong currency is very good. However, if the pace is not checked, it could actually have negative implications for exports. Our exports will become more expensive relative to the exports of other regions, which would also affect inward proceeds, which would affect our reserves and then our inflation. If the exchange rate does not hold and there is a reversal, that is, if currencies in the sub-region begin to depreciate, and I speak particularly of the West African Monetary Zone area, this would have a negative impact on prices because a lot of the exports in the a lot of the goods in the sub-region are imported. This will not look very good. Regional fragmentation. The three countries have threatened to leave and have effectively left. This would have implications for trade, the movement of persons, and also the prices of goods. If ECOWAS enforces its laws and regulations, which more or less imposes taxes on goods which are coming from outside of the sub-region, goods coming from Burkina, Mali, and Niger will become more expensive. And since they have already imposed a 0.5% tariff on ECOWAS goods, goods going there could also become more expensive. Consequential political activities. This year, Cote d'Ivoire, Guinea, and Guinea-Bissau are likely to organize elections. We pray that everything goes on smoothly. If there are extensions, there are disturbances, these could affect socioeconomic development over the period. Now, this slide, next slide speaks about the impact of the three countries on trade, likely impact. The figure on the left is trade of the 12 countries with the rest of Africa. As you can see, the 12 countries trade more with SADC, with the Arab Maghreb Union, with ECAS, and the EAC. On the right, you have the three countries. You can see a similar pattern with SADC, with Arab Maghreb Union, with ECAS, and before the EAC. That means that the countries export similar goods. The pattern of export is similar across the countries. What is also striking is that we export similar goods to these countries. That speaks to the level of integration. Even though intra-regional trade is low, there is a pattern of a particular export destination which the countries have been sending goods to. This graph shows that with the three countries, intra-regional trade in ECOWAS was at 9.7%. I'm referring to the figures in the middle. That was in 2022, declining to 9.4% in 2023 and 6.7% in 2024. Without the three of them, intra-regional trade was at 5.9% in 2022, 5.8% in 2023, and 3.9% in 2024. That means the three countries trade more amongst themselves, as can be seen on the graph on the right. Intra-regional trade for the three of them was at 47.6%, declining to 42.8% in 2024. So the impact will be that intra-regional trade for ECOWAS will reduce, and if care is not taken, that could also impact the kind of historical heritage and the kind of connectivity that we have across, especially the border areas for these countries, if the ECOWAS protocols are strictly enforced. However, in terms of overall economics, it's obvious that the countries are landlocked and they are more dependent on ECOWAS countries than ECOWAS is dependent on them. So this ends the end of the presentation. You have country briefs in the report when you find it. Thank you very much.
Thank you very much, Dr. Asenso, for that brilliant presentation. And I think we will now use the next 30 minutes for question and answer. You can post your question and answer at the whatever text or what have you, or you can say aloud, and we will go through that. But thank you so much, and thank you, Dr. Asenso, for that, for the presentation. So, question and answer. I will also call on the communication team. If there are questions, you can send it through our WhatsApp messages, questions that we are not getting. You can also raise your hands if you want to ask questions on the presentation. Oh, I said that the presentation was very clear, and Dr. Asanso did a very good job on it, so much so that we are not getting questions.
And so far, we don't have any questions for now.
Okay, what we're going to do is that maybe we are going to maybe we can we have so I just want, okay, Nigeria is okay. So somebody just wrote that Nigeria is now the third largest economy. So which countries are first and second? The third largest economy, I mean, are you saying in a region? That I don't think Samuel Akers said, brilliant presentation. Looking for how do you see the effect of uncertainties on our countries? That's it. So that's a question from Samuel Akers. I think that Samuel Akers should be on the board of directors of the bank. Thank you, Director. So Nigeria is not the third largest economy. Which countries? I don't think he said that Nigeria is the third largest economy in the region. I think it's in Africa. I think recent. But Doc, you would like to take those questions?
Yes, sir.
The question. Yeah, go ahead.
I think you answered correctly. So Nigeria is the third largest economy in Africa. South Africa is number 1, and Egypt is number 2, followed by Nigeria.
Egypt number 2.
Nigeria is number 1.
Mr. Akers said that what are the impacts on our countries? I don't think I got the question clearly, but there was. Maika, can you post the question from Director Akers again?
Yes, it's there.
Yes.
Okay.
Ask how do you see the effects of uncertainties on our countries?
Good morning, sir, Mr. Akers.
Yeah.
So as you can see, the IMF itself revised the global GDP projection downwards. We believe that the sub-region could have performed much better than the projection we are giving it. However, there are implications for issues like the trade war and also the departure of the 3 countries in overall GDP growth. We expect that with the current tariff issues, if the central banks do not take a cue from declining inflation and there is a reversal in the trend currently, there will be an increase in interest rates, which would also increase the borrowing cost of countries and a bank like ourselves. So it doesn't really look good, but we can counter that in the medium term by increasing intra-regional trade amongst ourselves. And unfortunately, this is the time that 3 countries are leaving, which are better known for intra-regional trade. Thank you.
I think Doc said already the declining level of intra-regional trade is also is a worrying concern, because if we are talking about having a single currency, a low level of inter-regional trade does not portend well for such, because it means that there is no need to have these things. So we are hoping that we can step out our attempts to be more regionally integrated. I think this is a key point that was raised in the paper, in the presentation by Dr. Asanso. So we are we are less than 10% now in terms of trade integration. That is sort of worrying. Okay, any other so maybe what I would do, since they are not asking questions, I've gotten some. I will get one for Dr. Asanso to highlight integration opportunities, but after and we would like to solicit views on actionable steps for ECOWAS states. So Doc, what are some of the opportunities that AFTA can offer to us as a region?
Thank you, sir. So with the departure of the 3 countries, for example, if ECOWAS were to enforce its protocols, it means that goods coming from Burkina, Mali, and Niger into ECOWAS would attract a minimum of 0.5% tariff and a maximum of 20%, and vice versa, because this year they actually imposed a tariff of 0.5% on ECOWAS. What AFTA does is to take the whole of the African region as a single market, which means it eliminates some of these CET tariffs that every region has. So goods which are coming from a place like Kenya, for example, to West Africa, if it is guaranteed or if it is proven that it was produced in Kenya, would not attract a maximum tax that ordinarily ECOWAS would have imposed on it, because now we are a single market. So what we need to do as a sub-region is that we need to activate the AFTA protocols and ensure that we improve production within the sub-region. That would help us to improve on intra-regional trade, which is a necessity or a necessary condition for the adoption of a single currency, and to be able to also compete favorably with some of the regions in Africa, like East Africa and then Southern Africa.
Okay, thank you, Doc. Any other question again from the so I will also want to, Doc, so what are some of the strategies that countries need to put in place to mitigate the impact of global trade wars and the trickle-down effect on West African economies? What are some of the strategies that our countries, or maybe as regional development banks, we need to do to mitigate the impact of global trade wars, because they are, I mean, we see the uncertainty sort of being, pronounced. So what are some of the strategies we need to put into place? Okay, I see the hand of Natalie. I see the hand of Natalie, and then Maigan. So can we go to Natalie? Natalie, you have a question to ask, or you have some suggestions to make?
Yes, I would like to read a question from Edwin Puwoga, who says, thanks for the excellent presentation. And my concern is the impact of intra-regional trade in the ECOWAS relative to the AES countries. And in the presentation, intra-regional trade is growing faster at a declining rate. What is the way forward for the ECOWAS?
Okay, thank you there, Edwin. Doc will take that, or I don't know what I will ask. We'll get a question from Maiga or another question, then the Doc can put all of them together. So can we, okay, Doc, you want to take that? You want to take that one?
Yes. So the issue of intra-regional trade has been on the drawing board for a very long time for West Africa. That's basically because we have specialized in commodity exports. That is natural resources, gold, cocoa, and the rest of them. These are goods that are not in high demand in our sub-region. They are in high demand elsewhere. So the focus has always been on extra-regional trade, Europe and America and China. It's about time we began to look at producing goods which are of relevance in our sub-region. If you take, for example, Niger produces a lot of onions. Burkina produces a lot of tomatoes. Those goods are in high demand in the sub-region. Those are the things we need to emphasize. How do we process these commodities and ensure that we increase their shelf life to improve intra-regional trade? Because otherwise, we are always looking at getting dollars and euros from outside without focusing on the advantages that intra-regional trade gives us. Like, for example, now that there are global wars, and in 2022, for example, when the Russia-Ukraine war started, all of a sudden, the prices of goods went up because the two of them control about 50% of the grain market. And we have land. West Africa has the best land, arable land, the whole world over. Yet, our cultivation yield per hectare, our yield per hectare is very low. If we are to improve on yield, land yield, we are to improve on identifying the goods that are in high demand in the sub-region and focusing on that and increasing intra-regional trade. That would help us to deal with the external shocks that come in. I think that is one way we can address this. Thank you.
A question from Mr. Trocom Brown from Liberia says, sir, how can ECOWAS member countries manage their rising debt level while sustaining economic growth? Mr. Trocom Brown from Liberia.
Thank you very much. So this is, it's a big issue because there is need for us to build infrastructure. At the same time, as we don't have a lot of resources, or we have not identified a lot of sources of additional resources to be able to implement this. So we resort to borrowing from the domestic market and also externally. Some models have been shown. PPP is one of them, even though it is difficult to do, but there are very successful stories the world over that we can replicate, where the government, for example, would give some support, which is non-pecuniary. It can be land or anything, so that a private sector person can build a road and toll it, for example. There are other examples, like, for example, in the Gambia, where the government has built a very wonderful road. It's like 6 lanes connecting it to Senegal without borrowing a cent. What they did was to pledge the flows into their road fund. And that is what they have used to finance it. So all the road fund proceeds are committed to paying the contractor. So it's a way you can do it without necessarily incurring additional debt. But the sustainability also comes to question. So it's difficult for African countries, and especially for our sub-region, to build infrastructure which are very needed, and they are enablers of growth. However, if you want to do it, you must either come up with the resources or you must borrow. But PPP and then committing existing flows can be one way by which we can address this. Thank you.
Oh, thank you, Doc. Mr. Kofi Waten from, I think from Abuja, asked, how can the ECOWAS Bank for Investment and Development and the ECOWAS Commission work together to produce a single report? I don't know, Doc, maybe you take that, then I will come in, Doc. Doc, so Kofi Waten from Abuja.
Thank you very much. Thank you very much. The ECOWAS Commission and EBID actually work together. Just last week, there was a meeting. Mr. Edwin Puwoga asked a question earlier from Liberia. He was also there, where we looked at the macro numbers for the sub-region after the countries had submitted it. Let me say that whilst collaboration is very good, you also have to look at the intended use of the reports. ECOWAS is monitoring the macroeconomic convergence criteria of the sub-region with the aim of adopting a single currency in the next coming years. As a development finance institution, EBID is also enjoined to do a projection of macroeconomic variables and also socioeconomic factors, which is done by entities like the African Development Bank and by the Afro-Exim Bank, Asian Development Bank, the World Bank, IMF. So the fact that we are producing 2 separate reports, with ours published and ECOWAS used mostly for internal purposes, does not create any friction, because we work together with ECOWAS to produce their report. And this particular report is used as part of our project assessment for each country that we invest in. Each project document has a section of macroeconomic factors, which we draw from the WADO to develop. But there are synergies between ECOWAS and EBID. EBID is an ECOWAS institution, and we will continue to work with ECOWAS to do some of these projections. Thank you.
Thank you, Doc. The question comes from Naomi Sise in Conakry, Guinea. She says, how can ECOWAS Bank for Investment and Development provide practical solutions to persistent food insecurity and food waste in the region as outlined in your presentation?
Thank you very much, Naomi. The bank invests in various sectors of the economy. One of the key areas that we have invested in is the agriculture sector. And we have focused over the past 5 years on transformation of agricultural output. We have examples in Cote d'Ivoire and other places where we've done the DayPie project, which is looking at beyond the farm gate, what happens to the goods that are produced. We have also done cashew transformation and cocoa transformation in Cote d'Ivoire and elsewhere as well. So we have committed over $500 million to agriculture transformation. That is the value chain of agriculture. And it is something that we will continue to do over time as part of our mandate being a DFI. Thank you very much.
Yes, Doc. I think there's a question here from one Kwesi Avoin Lolo. He asks, why can, I think this question does not, I don't think it's a question that's intended for the presentation of WADO. It's asking, why is it that EBID and BWAD don't join to make a big development bank? I think that is the policy question that is beyond the scope of this presentation. But we acknowledge your question, Kwesi. We think that it's important, but I think it is at a level of it's a very high level that we can think about.
Maybe, Mr. Ganu, maybe I can share some light on that. Yeah, it's a policy issue, but at the side, what is not known to many people is the fact that we also partner with WADO to finance projects together as partners. So we work together closely to make sure that we deliver on our corporate mandates as DFIs in the sub-region. And that may also help the person who sent the question. Thanks.
Okay, thank you, VP for that. There's a question from Kwaku on LinkedIn. He said, great. It is always, the missing puzzle is a practical and real planning and strategy to meet the targeted objectives. I think these are things we're taking into consideration. These are things, this outlook. There's a question from Evral on LinkedIn as well. What can we do to reduce all the bad effect? Okay, I think Dr. Asenso and even the VP have talked about that. We have been discussing all of these things in the presentation. So are there any other question? Are there any question?
I think there is a question from Solomon.
Director,
okay,
in the chat, we have several questions from somebody called Diaby, but I'll give you a question. It says, beyond the general recommendations, what concrete measures can EBID propose to implicate more the private sector in defining regional policies? And how can we reinforce our public-private partnerships in the context of fragmentation?
Okay. Doc, you take that one?
Yes, thank you very much. So our bank is a development finance institution. So we don't just invest, but we seek impact. And one of them, as I said earlier on, is in the area of agriculture. We also build interconnecting infrastructure that is telecoms, roads, railways, and so on and so forth. The issue of building concrete measures, I think that's why we work in close collaboration with governments and also the private sector. We work with governments as a way of supporting policy that are positive for the private sector or for private sector growth. A case in point, in-house, the bank had focused a lot more resources on public sector investments before 2021. The current strategic plan, 2021-2025, flipped the narrative in favor of the private sector, where we have committed a lot of resources to the private sector as opposed to the public sector, because that is the engine of growth. And we have actually demonstrated through our reports that we have been consistent with the strategic plan implementation. So we are building synergies with governments, we are opening doors to the private sector, and we keep coming up with webinars and programs as a way of onboarding many private sector entities as much as possible. With regards to PPPs, we are engaged with many countries in that regard, and we are hoping that in the coming years, as the bank becomes better capitalized and better resourced, we will do more of such collaborations. Thank you.
Okay, somebody asked a question, what is the bank? How can AI be, how can we deploy AI to solve some of the economic problem in the sub-region? Maybe I will go on this and then Doc can just say about that. We are all cognizant of the fact that artificial intelligence is evolving very fast. And at the pace at which artificial intelligence is going, if care is not taken, we might not be able to catch up. But trust me, there are mechanisms being put in place to ensure that member states, our discussion with member states and other partners are pointing towards the fact that we need to be on top of the game as well, because AI is the way to go. AI could impact on employment. AI could impact on skills development. What kind of skill set our future generation will have to embark upon to be employable. These are all issues that are emerging today. So we are cognizant of that as a development bank. And then our ending discussion we are having with member states in coming up with a strategic, things. We tend to discuss these things because we know that they are very, very key. And Africa should be at the forefront because of the youthful population. You know that Africa has a large youthful population, especially in West Africa. So there's something that's very, very important. A question in French is: quels sont les mécanismes de financement innovants que la BIDC compte déployer pour moderniser les infrastructures de transport et de logistique, particulièrement dans le contexte actuel de fragmentation régionale où certains corridors commerciaux sont perturbés?
C'est ça pour moi.
Je laisse ça avec c'est celui qui est chargé de ça, le vice-président chargé d'opération, le docteur Hashimolo. Monsieur le vice-président, peut-être prendre ça en français.
Oui, merci bien, monsieur Guano. Merci pour la question, monsieur Duhabi. Actuellement, la BIDC a déjà projeté que oui, c'est possible d'avoir certaines perturbations dans le secteur du trade. Mais ce qu'on a fait, le mécanisme qu'on a mis en place est que on a trouvé que les gouvernements aujourd'hui ne peuvent pas financer toutes les infrastructures 100%. On doit impliquer les opérateurs du secteur privé aussi. À cause de ça, nous avons déjà commencé de financer certains opérateurs dans tous les secteurs clés de chaque pays. Par exemple, au Mali, la plupart des fournisseurs du carburant aujourd'hui sont nos clients. On a financé leur activité. On a acheté des camions pour eux aujourd'hui pour qu'ils aient la capacité de transporter les produits. Parce que le Mali, par exemple, est un pays enclavé. Le Mali importe la plupart des produits ailleurs. Nous, la BIDC, on les a assistés de trouver des équipements modernes d'importer les produits vers le pays du Mali. Même chose au Burkina et les autres pays de la sous-région. Parce que notre réalité est que si les opérateurs du secteur privé ne sont pas bien impliqués dans l'activité de commerce, ça va devenir un peu très, très difficile pour les gouvernements à financer. Voici ce que la BIDC a fait par rapport aux assistants innovants d'assister les pays pour de développer les pays. Je crois que c'est bien compris. Excusez le petit difficulté.
Merci, Monsieur le Vice-président. Il y a une autre question ici comment la BIDC assure-t-elle la fiabilité de ces données macroéconomiques et de ses projections lorsque certains États membres ne participent plus pleinement au mécanisme de reporting institutionnel? Monsieur, mais on assure de la fiabilité de notre donnée parce qu'on s'appuie sur beaucoup de sources. Et puis, je voudrais vous assurer que depuis qu'on a commencé la publication des WADO là, on n'a jamais eu l'occasion où les données qu'on donne là, c'est pas fiable. C'est vrai que aujourd'hui, avec, comment l'appelle-t-on, les sorties de les 3 pays là, on fait beaucoup de choses. Il y a des sources qu'on consulte comme le FMI, les pays eux-mêmes. Donc, je vous assure que les données que la BIDC ont fait ces publications sont fiables à hauteur de 80 quelque chose pour cent. Donc, c'est fiable. Comme le FMI, tout ça là. Et puis, les pays, on assiste à des réunions comme telles que la CEDEAO et voilà, les autres réunions là pour avoir ces données. Donc, on vous rassure que les données qu'on a ici sont fiables.
Au-delà de ça aussi, il faut noter que oui, c'est vrai que certains pays ont décidé de quitter la CEDEAO, mais la BIDC reste toujours en contact avec tous les pays. On a demandé l'approbation exceptionnelle des autorités de la CEDEAO, puisque la BIDC continue de travailler avec les 3 pays. À cause de ça, on est toujours en contact. Ce n'est pas simplement l'information disponible sur Google ou les autres ressources, mais on est toujours en contact, on a un contact direct avec les autorités de chaque pays et aussi on prend les informations actuelles et à jour. Chaque fois, s'il y aura une publication comme la nôtre aujourd'hui, rassurez-vous que l'information est fiable et c'est quelque chose qu'on a collecté de la source vraie de chaque pays. Merci.
Il y a une question ici, je veux que ça là, je vais donner ça, comment on appelle le docteur Ascenso, moi-même je vais essayer de répondre à ça. Étant donné que le commerce informel représente une part significative des échanges régionaux et que la fragmentation peut l'intensifier, comment la PDAO, non, on dit WADO, on ne traduit pas le nom, hein, monsieur. Merci pour l'innovation, mais c'est WADO. WADO intègre ce flux non capté par les statistiques officielles. Bon.
Et pour les statistiques aussi, ou bien vous voulez commencer?
Oui.
OK, parfait. Merci bien pour la question. C'est une question très pertinente, mais la réalité est que oui, il y a certaines parties qui ne sont pas captées dans les données officielles, mais il y a certaines organisations et associations aujourd'hui qui suivent toutes les activités de commerce pour les petits commerçants au-dessus de la CEDEAO. Par exemple, il y a une organisation qu'on appelle FEWASI, Federation of West African Chamber of Commerce and Industry. Ils sont très forts. Ils regroupent toutes les associations dans tous les 15 pays de la CEDEAO. Les petits commerçants, ceux qui vendent des arachides, l'huile en bouteille, tout ça. Ils sont des données très, très fiables. On est toujours en contact avec ce type d'organisation. Leur DG, le docteur Akadiri, on peut dire c'est quelqu'un qui est très, très fort. Il est proche de la BIDC. S'il y a un besoin de formation, en même temps, on le contacte d'avoir les détails pour s'assurer que les données dans les secteurs informels aussi sont captées dans notre publication. Voici ce que par rapport de votre préoccupation. Merci.
Merci, monsieur le vice-président, mais c'est une question, comme le VP a dit, c'est une question très importante. On va voir quel mécanisme on va mettre en place pour pouvoir capter les données qui proviennent du secteur informel. Bon, c'est pas, je vois vois pas. OK. Je pense que le VP a déjà répondu à ces questions. Au-delà des recommandations générales, quelles mesures concrètes la BIDC propose-t-elle pour impliquer davantage le secteur privé dans la définition des politiques? Bon, quand vous regardez notre plan stratégique, là, on a Didier, on a dans le plan stratégique en cours, vous voyez, comme le VP a dit, on veut équilibrer, comment on appelle, la répartition entre le secteur privé et le secteur public. La BIDC a commencé en tant qu'un fonds de la CEDEAO qui était dédié principalement à les financements des projets du secteur public. Aujourd'hui, on est conscient que en développant le secteur privé, ça peut servir en tant que moteur de la croissance économique dans la sous-région. Donc, la répartition aujourd'hui, c'est presque 60 et 40% dans notre plan stratégique, dans notre politique de financement. Donc, le VP vous dit beaucoup par rapport à ça, mais on peut dire qu'on est conscient de fait que le secteur privé, c'est un moteur de développement dans notre sous-région. Maybe I don't know whether you have any other thing to add. I think these are
I've captured all. You've captured all. Thanks. Thank you. Except there are other questions. We are standing by to address the questions or other concerns.
And let me thank. Okay, I think we are going to 11:03 now. We have done more than an hour now. So I think another question I see. Okay, we already answered this question. Okay, maybe since this is much more a strategic question, we'll go to the VPO to
there's a question online, please. There's another one on the chat box from one Mr. Edwin Puwoga. He said, again, Doc, what strategic response should ECOWAS adopt to counter the declining remittances amid tighter Western policies, especially from the US? You want me to address that?
What the question, sir?
He said, what strategic response should ECOWAS adopt to counter the declining remittances amid tighter Western policies, especially from the US? Maybe if you want me to start taking that. Every country wants to protect its own. That's what the US is doing by putting in place some of these tighter measures, especially against remittances and so on. It is true we are impacted because most of our brothers and sisters are out there in the US, in Europe, and in Asia, remitting some amount, which is substantial today in most economies. There could be smarter ways around this. Rather than our brothers sending $10,000 to a family in a month and so on, what our advice as an institution is that we can actually tell these brothers, don't send cash. The US is also interested in exporting their products and goods. Why don't you send equipment? Today, most of our countries, without any exception, are into the production of cassava, which can be transformed into several finished products. If you go to some African shops in the US today, you see packs of gari produced in Accra, produced in Bamako, on the streets of the US. What we can do is to encourage our brothers in these countries, buy those same remittances you were sending in January in 2024, buy the equipment for us to transform these agro products into the finished goods. The US will be happy that you are exporting this equipment to Africa. So at the end of the day, you create a win-win situation. You are also creating more jobs, and you are adding values to what our brothers are producing on the farm, either in Conakry or in Grand Bassam in Cote d'Ivoire, or in Liberia. So what we need to do is encourage our brothers, look for good equipment that can help on the field in the agricultural sector, and send it back to home. This can help us a lot. And at the end of the day, we may even end up exporting more of gari, more of processed yam, more of dry fruits to the US and other parts of the world, and also create jobs for our siblings around the economy, ECOWAS community. Thank you.
I think VPO, I think you talk like a government minister, and you have done the complete strategy. I think this is nothing beats that thing you just said. I think it's something that policymakers need to look at, to see how you can get into a win-win situation. So
let me also share some examples with us.
Yeah.
I like what the Indians do to help themselves wherever they are. Now, if you say, for example, the equipment to process gari, which is very dear to me, costs about $100,000 or $200,000. What most other people do, especially the Asians, do is that they come together to form a small club of financiers. Let's say we want to put a $200,000 equipment in Monrovia to process gari. The person sending $10,000 here and there, they can come together as investors, put the money together in the US, buy a single equipment, put it on a ship, send it to Monrovia, and they process it. At the end of the day, the proceeds will be shared by all of them. At the end of the day, we're helping the US economy to export equipment. We're also helping our brothers back home here in Africa. So these are some of the innovative ways of addressing these challenges. Thanks.
Thank you so much, Doc. Dr. Sanso, any comment, any further comment on the brilliant presentation you just made? Any further comment, Dr. Sanso?
Maybe just to add my voice to the issue of the remittance. Nigeria, for example, the remittances for 2024 was in excess of $20 billion. More than 80% of that came from the US. Ghana, $6 billion. More than 60% came from the US. In the immediate term, that will be difficult to plug if the cost of transferring these monies are going to go up. However, what we can do beyond this is to find ways of increasing intra-regional trade, transforming our products to be able to sell and bring in more hard currency, because that is the bottom line, how we can sustain our currencies. Because as we saw in the case of Ghana in 2022, the rapid depreciation of the cedi led to a decline in economic growth, led to, high inflation and so on and so forth, like we've seen in Nigeria, where its share of regional GDP and continental GDP has reduced. So we need to focus on how we can shore up our local currencies, and it's a threat in the short term. We need to diversify with a view to plugging this hole in the medium term to long term. Thank you.
Thanks.
Thank you so much, Doc. I think that's a very, very, very good observation, and I think we need to start taking measures on our part to ensure that we don't be at the losing end of whatever policy or whatever thing that is taken on the other side of the Atlantic or whatever we need to be on that. Any other question? I don't see any concern. The communication team, are there any other questions?
No, Director, there are no more questions.
Okay. Having said that, Mr. VPO, with your authorization, I would like to close this webinar and thank you. Maybe I will defer to you so that you can do the closing for us. Thank you.
Thank you very much. Thanks so much, Director Guano, and thanks to our participants for your interest in our bank, the ECOWAS Bank for Investment and Development, and thanks to the team for the good job done on the production of WADO and also for the explanations to consent and so on. At this point, before closing, I just want to let our audience know that yes, we are closing this webinar now, but we are still open to take more questions and consents. You have our email address, and we also assure you that this document will be available on our website in the next couple of hours so that you can browse through it, brighten your mind, enlighten your mind with current and up-to-date information about economic events in the whole of West Africa. And if there is any specific need, please feel free to drop us email. Our email addresses are there so that we can address your concern. We assure you, EBID is your bank. We are very nimble and willing to listen to our markets, and also willing to provide actionable advices that can help us to beat the storm, the current storm. It will always be there. That's the reality, and that's what we have learned in the bank. So the bank is filled with professionals in all sectors that can also help people beyond just being your bank. So please feel free, whenever there's any need, reach out to your bank. On behalf of the president and the entire team here in EBID, we thank you once again for your time, for your presence. We appeal to journalists, in case you need further information, please reach out to us. At this point, we want to close the session and wish everybody a pleasant afternoon. Bye-bye. God bless you all. Thank you so much.
Okay, VP, just a little reminder. Thank you so much. There's a survey at the end of the presentation, so we just want participants to fill up the questionnaire, whether we, we want these feedback to help us to prepare better next time. Thank you. Thank you so much. Thank you. Thank you, everybody.
Thanks so much, everybody.
Okay.
Have a wonderful day.
Recording.